Hi, Andrea Mesis here with DNA Construction Advisors for this live virtual REDinNYC event. Super happy to have you here. Looking forward to seeing all of the new and exciting things like this one that REDinNYC is hosting. But great to have you here today, Louis.
Thank you, Andrew. Happy to be here.
Thank you so much. Thank you so much. Now tell me a little bit about Caius Management and what you do and what your business is all about.
Okay, well, Caius Management is my firm, and I'm an advisor and an investor. And currently, my main engagement is as a managing partner for Curo Enterprises, which is a family office-backed commercial real estate investor and operator, primarily creative office in Los Angeles and Boston. And we are currently down to the last few assets in the portfolio because we've been selling out since about late 2018. So we've started an exit, and now it's looking forward. The family office that was engaged there really no longer wants to be in direct real estate, so they've
Sure.
Massive strategy. So now I'm actually engaging other multifamily offices and family offices to find new deals, since it looks like there's going to be a little bit of disruption coming up now after this whole pandemic. So it's an interesting.
That's a good opportunity, right? A lot of people are seeing it as such. They're seeing it as a window to get a good deal, right?
Absolutely. I mean, it's still kind of in limbo right now. It's going to take another 6 or 9 months before I think we start seeing transactions really happening again. But certainly a time to be kind of hunkered down and doing a lot of analysis and preparing yourselves for the areas you want to maybe transact in.
I couldn't agree more. I couldn't agree more. And I think minding the trends and really figuring out what's the next good deal, or where is everyone going, where are their minds and their hearts headed, is definitely the best strategy that you could possibly have right now.
It is. As long as you're not in a position yourself of being over leveraged or distressed yourself, which thankfully we've been exiting for a while. So not that we saw it coming. It had nothing to do with any of that.
You wish you could say you knew, though, right? Wouldn't that make you the most valuable person in the room?
It's more of a choice of where the particular backer and investor wanted to be, and it was no longer, directly actively managing real estate. So turns out now, it's been a real surprise on what we're going through here, but we'll see how it shakes out. We're trying to figure out what the next, areas to really focus on are.
Certainly. And I think it's important. You are at the advantage, I think, in this market, that you do have the opportunity to say, I'm going to think before I act. There's a lot of people that were extremely over-leveraged. Not only over-leveraged, but they had already doubled down 2 or 3 times over. And they couldn't afford this moment. Maybe they had a big project where they were ramping up, they were scaling, and then there is no such thing as scaling. Whatever they had is completely obsolete. And I think a lot of people are really wishing they had been more conservative in the past.
Yeah, and unfortunately, this pandemic really hit the heart of what was a huge kind of theme in the last 10 years, which was the urbanization of these cities. And, the younger cohorts wanting to be in more densely populated areas with public transportation. And it's just completely drove a dagger into that theme. And so everybody who was moving, all parts of the real estate machine were moving in that area. And that's really going to cause a lot of kind of recalibration and rethinking of strategy. So
I have to agree. I mean, it looks like Brooklyn, but it's actually Jersey. I live in my hometown, and I know I couldn't have imagined going through the quarantine being in an apartment, right? Or even a small apartment, especially with a child. So I know that people moving out into the burbs is going to be a huge push. But we just built all of those high-end resis. Like, what does that mean? I was always wondering who was going to go in them anyway. Now I'm even more concerned.
It makes it a lot more of a challenging sale. There's no question about it, with the inventory that's coming out. I mean, even in the hotel market, I know hotel rooms, I think online by the end of 2020, early 21, we're going to be 15% more inventory of hotel rooms just in Manhattan. So that in of itself, I think, is going to be another area of big problem. So
I totally agree. So one of the things that I've been doing is working really closely with small businesses. What advice would you give to contractors B2B and B2C on the resi and commercial side. What do you think they need to know to get your attention?
Well, I think, I think this time, it allows you to kind of reconsider your pitching and how you're going to promote yourself to new business. And how we've always kind of approached contractors has mainly just been by quality references. So I would, if I were in a position such as one of your network of clients and that, I would be looking really towards building a fresh reference list of architects, past developers, and maybe, really high transaction brokers that, control a lot of a market that you're interested in or that you have a expertise in, and really refresh that list, make it current so that you have a ready list of references. So that would be the first thing. The second thing I think would be maybe develop like a history of where your projects have come in or under budget, because that track record, that would be the track record that, a firm like mine would be showing how we hit certain hurdle rates in terms of our investment returns.
Absolutely.
So that is like, that's kind of treating yourself like you're your own business operator and your own trying to generate hurdle returns so that your clients benefit on their hurdle returns. And that's definitely the most important thing for us to see, that when we're going to engage a contractor, that we are confident going in that they're going to come in and under budget. And knowing that they have a track record of doing that, it makes you feel a lot better, especially if you haven't done any business with them before.
Understood.
And as third, as part of that whole kind of revised pitch, I'd show a few case studies of particular problems or examples during that construction phase that maybe you had to value engineer to get it in under budget, and how everybody was happy with it, whether it was a different kind of finish on an exterior of a building, or a different approach to deal with not moving a wall, or some sort of, interesting creative.
Any site conditions and how they modified in order to meet those site conditions. Even changes in schedule. I think that is a big time, it's cost a lot of money. Changes in schedule. Exactly.
And being creative on the fly and not,
sure.
Those are the three things I think that we really look for.
Okay. That's a really good point, because I've done a lot of commercial capital projects that are being done in active buildings, whether it's replacing turnstiles or sprinkler modifications, and it's what you figure out how to get around that really makes you the better sub than just what your price was when you walked in. If you were going to start hitting people with ridiculous change orders day two, you didn't do anything but just fake, you manipulated the situation because you knew you were going to, bill them later on the back end. So yeah, I completely agree.
I mean, look, change orders happen. I mean, that's not something that, everybody understands that. But I think, going in knowing that person or that contractor or that partner that you've brought in to do your construction has had a history of hitting in and under budget, would make you confident, even if a change order came here or there, that ultimately it would still kind of fall in. Right.
And I think customers are very in tune to that. And I think one of the biggest things that my customers in the past have really been important to them is for contractors to manage their backlog. Do not tell them that they have to wait. You need to be ready with your manpower and your crews when they need it, not when you can throw it into your calendar. I think there's not enough companies that have ample staff in order to be that responsive for their customers.
And I also think that, a developer owner, whether it's a renovation or a full development, that I think they do look to the construction company to advise them on maybe things that they should avoid, because that has a potential of becoming very expensive, or maybe it's not worth it. We have these types of things that are alternatives, and maybe the contractor at that point, it may not be as high margin of a project within the larger scope of things, but ultimately they're benefiting by getting the owner, better cost and making their budgets in line so that they make money and everybody's happy, and that will ultimately work down the road for that contractor to show that they're, looking forward and looking ahead out of the benefit of their partner or developer.
For sure. And I think you made a good point too on the value engineering. If the mechanical engineer sends the drawings that look a certain way on the MEP, but you have a better idea, the mechanical engineer still has to approve it, but you should make that recommendation. Don't just bid plans and specs.
Yep.
Be innovative, come with your suggestions, come with, a scenario that you might have just tackled that saved another customer money. People want to hear that even if they're not the low bidder.
No, absolutely. And I think it's all about communication ultimately.
Mm-hmm. Agreed.
Have good communication and your contractor is not over promising and under delivering, and you guys are communicating and girls are communicating based on, daily kind of flow. And that's really ultimately what's going to get the project forward and get done.
I agree. And then what do you think, and I hate even having this conversation, post-COVID, what do you think the innovation is? What do you think the trends are? Aside from people moving out of New York City, what do you think we can anticipate from developers and from the New York City market?
Well, personally, I'm from New York City and I live in the area, and but most of my transactions were primarily in Los Angeles, and then the other half of our business was pretty much in Boston. But knowing New York City and bidding on properties, we never actually did anything directly in the last few years. But ultimately, I think, look, business is going to be difficult for the next, I think, about 2 years. I think it's really going to send a shockwave through managing your business in the city, and also just managing employees getting in and out of the city and all the things that everybody's aware of. I'm not telling you anything new. Yeah. But I do think ultimately it's going to come back. I don't think this is like the end of the urban city.
Would you liken this to 2008?
What's that?
Would you compare this to 2008? Do you think it's going to mimic a lot of those trends of that time period?
Yeah, to me, it's kind of a combination of 9/11 and 2008. It almost felt like a natural disaster in a way. And I know a lot of families moved out of New York City after 9/11. But yeah, look, there are so many things about New York City as a global kind of metropolis and gateway city that is always going to, attract and reinvent itself. So. But, there definitely are some challenges, in not only from a political standpoint, but as well as from this health standpoint, and just the way these things are presenting real obstacles for things to be moving forward quickly and back to normal, more so than any other parts of the country. So how I see it really is that, I think that, high-end residential is really going to be difficult for a while. And it really got very, it was already struggling, and now this is just another reason to really recenter what that real strategy is. But really what it comes down to in terms of in real estate transactions in general is lenders, and where are the lenders going to be? How easily are they going to come back and want to lend at a 65%, 70% LTV without some sort of onerous reserve up front, whether it's an apartment building or a hotel or an office building? That's really, and that remains to be seen. We have not gotten through the forbearance periods or these reprieves and all these kind of adjustments that have been made. But I think what's going to happen, and I'm not the first one to say this by any stretch, but you're going to start to see by October, November, lenders getting impatient, and some just don't have the ability to restructure the loan, and they're just going to have to either, whether it's a special servicer or someone else, just have to exit and move on. And that's when I think the first couple of big transactions and things, and the new tone of where the market's going to go is going to start to be set.
Yeah, I agree. I actually just read in a pretty interesting article in the Real Deal that was, what's the crystal ball of the commercial real estate industry? And, they actually went to SL Green, Paramount, and RXR. And I was like, well, those are the ones that would impact my business the most. Because those are people that I've been dealing with for, 90% of my career. And it's like you just don't know, right? Is it going to be like 2008, or is it going to be more like, 9/11? Is it going to completely negate, commercial office space? Because at this point, everybody I know thinks that they're never going back to their office again. And I'm like, no, at some point you're going to go back, like people that are outside of our business.
No, but
But people are saying, the flexible office space, the open floor plan.
Yeah.
Are all those things gone forever, like because of this?
I don't think so. I mean, I just think that, there's going to be a time where they're completely out of favor. And I think once the virus runs its course and or a vaccine or some sort of real effective treatment comes out, and, we're starting to see, I mean, there's definitely spikes in cases, and there are some more hospitalizations, but I mean, it's just a function of the virus continuing to spread. And I don't think that really was a surprise. It's just that people were so used to getting these numbers down because everybody was sitting at home. But I don't think I think that there's going to be a big pause, and that's going to cause some reflection on how office space is used, and maybe terms are going to be shortened, and they're not going to be 5 and 10 year standard terms, or even longer. Maybe now they'll be shorter terms, especially for smaller tenants and things. But I don't think that people aren't going to go to offices anymore and all that stuff. I mean,
that was the right answer. Thank you for saying it out loud. That's what I think. Everyone's just thinking it's over. We just all work from home now, and that's not realistic.
No, and I mean, for example, my daughter just started a job today. Albeit it's in Paris, France, but it's.
I was going to say she's in Paris. She's working there. I thought she was just vacationing on your time.
She's first day in the office, and she said, there was. I mean, France, strangely enough, Paris is. It was hit pretty bad, but not like New York City.
Right.
But they've come back pretty quickly, and it's not terror over there.
Right.
Recognize that, okay, there's a virus, people are getting sick, but you know what? We're going to continue to go. But they've given her the option.
Right.
If she wants to work from home, she's fine to do so. But they would like her in the office at least, a week or two a month while she's, getting her training going.
For sure.
So, I mean, that I think, and then ultimately that once people start getting more comfortable in the office, I think it's going to be a little less tolerant to be spending 2 weeks straight at home.
Doesn't make sense. I couldn't manage somebody that I never saw their face. Like, absolutely not. Look at me. I couldn't even figure out how to start a Zoom meeting without Marissa today. Good point, right?
Yeah, exactly. Especially training people. So.
Yeah. I agree, and I couldn't possibly agree with you more. And I think it's reassuring news. There are technologies coming out, and they should be implemented, but they should be used as long as they're necessary, not necessarily throwing away everything that we know, right? There are certain reasons that businesses run certain ways, and occupying your office with the people that are part of your team is necessary, I think, for the emotional the camaraderie of institutions.
I mean, every enterprise has its culture, and you're not feeding the culture very well remotely. So.
Yeah, I agree.
But look, either way, I think that it's going to ultimately, I'll go back to it again, it's ultimately going to come down to the lenders and when they feel comfortable again. I mean, you could have tons of private equity players, tons of developers ready to get back in, but if the lenders are not still working out a whole bunch of legacy messy loans that they underwrote at the last quarter of 19 and into the first quarter of 20, that's going to hold the market back. So you got to keep your eye on the lenders and that activity and how they're talk to your lending partners and their friends, keep in touch with them and anyone and try to feel out how they're feeling, because that should be the first indication that things might start coming back. So that's the way.
I agree. And I work with a ton of owner landlords, property management companies, and they're really waiting to figure out what their tenants are doing.
Yep.
So once they figure out which tenants are going to default and move and reduce size, then they can figure out what they have and don't have. And then they can figure out what contractors they can award projects to because they don't know their occupancy. And I think that was very similar to 2008 in that. you didn't know which company was going to drastically change out from underneath us. And some of your largest anchor tenants might be non-existent after this. We don't know how every single business is truly going to be impacted or not impacted. And I think that's what a lot of the property managers, the property management companies are trying to figure out in order to give accurate information to the lenders.
Yeah, well, I think
than anything.
with New York, where they're particularly vulnerable, has been in the new like Silicon Alley tech in Midtown South, which we've officed in Flatiron for a few years, and I mean, that was an incredibly tight market of incredibly, I don't want to say sketchy, but certainly not credit tenants, right? And I think that's such a hot, tight market that I think that is going to be another area that's. That whole Midtown South, I mean, Hudson Square is a little more like the Google, Facebooks, and that's real more great credit. But a lot of the Flatiron area, I know, is filled with, a lot of these, more not credit-worthy tenants. And that's going to be difficult. Then you have WeWork, of course, which has been a huge.
Yeah. That's still shaking out, and that's still kind of unfolding. And we didn't have time to really evaluate the market impact on that before this happened.
Yeah. So Andrew,
that's a big hit.
What are some of the things that you're struggling with or you're attacking on the marketing side and dealing with your clients and your network?
Well, my job got a lot easier. I used to tell people I was a dot connector, and they're like, I know everybody. And now they can't get anybody because they can't go to dinner with them. They can't go to a golf outing. Oh, so you do need me to get in touch with that client for you. Sure, no problem. My genuine relationships with property managers and large contractors are real. And I think theirs were very transactional. And when the pandemic happened, they realized that they couldn't get somebody on the phone to figure out if that capital project was still happening.
Yeah.
But I was just a phone call away. So I think I had more value in project brokering, because I work as an outside sales consultant for a lot of contractors. I have way more value now, which is awesome. Very blessed. On the marketing side, everyone told me they had a kid that does their website for them. Oh, my son does my website. Congratulations, but nobody can find it, and nobody cares that it has cool logos. You need to be findable. You need to have a clear listings and clear market presence and SEO and all of these things. And just because you don't understand it doesn't mean you don't need it, right? And that's something that a lot of customers had the luxury of never having to establish a footprint. Because it was, everybody knows me. I don't need it. Everybody knows me. I see everybody all the time. But that's not an option now.
Is there a particular asset class that you specialize in with contract? Is it residential?
So I focus a lot on the project brokering. I deal with commercial office space contractors, open shop and union, on mostly the MEP, but really all of the trades up to the smaller GCs for interiors. On the marketing business unit, which is called fixmyrank.com, I focus more on business to consumer. And that's just my own personal agenda. I felt like there was a lot of contractors that didn't know where to start, and their businesses were going to close if they didn't fix it and get the leads coming in, get the word out to their customers of how they could help them during COVID. These companies weren't going to survive, and these are my local businesses, and local business means so much to me. So most of my marketing work falls underneath business to consumer contractors. And they need it, and they're really grateful, and they hug me when they're done. Because they're like, thank you for helping me,
I mean, we don't have any construction going on right now. I mean, I know friends of mine in the business are still doing renovation projects and large-scale renovation apartment complexes. And it seems to be going well, other than the fact that demand has dropped pretty dramatically for rental apartments in Manhattan. There's a inventory happening. But are you seeing some of your clients and network get back to work now pretty easily? Are they running into challenges staffing or any of those things?
I think I've used more of my management mentor program on the owners of the businesses than on their staff. I think a lot of people are stuck in the narrative that nothing's happening, right? And they're, you know, out on their boats, at their shore houses, you know, maybe getting a tan, enjoying their kids for the first time. They probably didn't even know their kids' names. You know, they were out so much. They all look great. They all look very rested all of a sudden, you know, now that I'm starting to see people again. I'm like, we needed this, dude. But they think there's no transactions going on. And I have deals every day. And vendors, you know, contractors, developers are calling me every day saying, I need a contractor. I can't get anybody on the phone. And then the contractors are saying, nobody's working. And I'm like, that's only because you're not paying attention. Like, there is work now. Lots of it.
This is all New York. You're all New York based? Is that kind of where most?
No, New York, New Jersey, Connecticut. I do a lot of lower Connecticut. But it depends on where the work goes. You know, I mean, if someone needs me, and I have the understanding. I actually just talked to someone about opening up an office in Dallas last week.
Oh, wow.
Okay. So there's people out there that need it. So if I can offer something that can be helpful, project brokering, probably not. I don't know the players in Dallas, but from a marketing standpoint, you could market people anywhere. So, and all of the tools that I use are nationwide resources, so they don't need to be kind of tied to one location.
Very good.
Yeah.
So, anything else that we want to discuss?
Yeah, that looks like a really nice bike. What kind of bike is it? I've been staring at it the whole time. I wanted to talk to you about it, but I just couldn't find a way to work it in on the doom and gloom conversation.
Like a resto mod, so it's like an older bike that's been kind of converted into a like vintage racer kind of thing.
Super cool.
Honda by brand, but it's
by brand, but there's probably like three screws that are Honda still left, right?
I'm now in the garage because we actually moved out of our offices. We were, like I said, we were winding down. We actually did our office space back in March, and then we were in a co-working space, and then we just let that go. So
right.
So we've been kind of already kind of winding down, but so now I'm in the garage starting over again. So it's exciting.
I'm the startup. What are you doing in the garage?
We're right back in there. Day one again.
Keeps you humble, right? I would want to sit next to the motorcycle all day. So that's just me. I don't think you're really a victim in this scenario.
Oh, it's all good. It's all good.
Awesome. Thank you so much for joining. This was, I knew, going to be a pleasure to speak with you.
Yeah, no, well, I think everyone, just like I said, keep an eye on your lending friends and talk to them. They're going to give you the most guidance. I do believe that New York is going to come back, but it's going to be a struggle for a couple of years. So I wouldn't be rushing into anything right out of the gate. But look, the hotel market we're looking at, I've been hunkered down doing a ton of analysis because I do think that there's going to be a lot of opportunities because it really looks like the ugliest sector. Like nobody wants to touch.
I have to agree. Like the last thing I want to do is stay in hotel.
Business travel. I mean, I think every Fortune 100 CEO has said they're going to cut business travel. They're never going to be the same again. That was the only thing I think they said. So you got to pick your spots. But I do think that, you know, lodging is going to be really, truly reinvented out of this. So there's going to be a lot of transactions and opportunities and changes.
Thanks
going
for the
on.
tip.
Yeah, that's I think a lot of people are onto that as well. I'm not the only one.
I agree. I think the one that's going to be impacted the most is going to be the most room. Most room for growth, most room for change and innovation. I couldn't possibly agree more. That's why marketing was where I went. Everybody needed somebody to send out a message, right?
Yep.
Didn't, like right after COVID, didn't you get every single mail that anyone you had ever given your email address to sent you their official statement? Like the dog food company sent me their official statement on COVID. And I was like, marketing. This is a marketing moment. Everyone thinks they need to send out a statement.
Exactly. It became a touch point opportunity, a reconnection opportunity. So,
yes. I agree. Well, thank you so much. This was too easy. It was too easy.
All right. Take care. Thanks.
Thank you so much. Let's talk soon.